Hi, good morning. I'm Daniela Captariu, broker real estate with Keller Williams Brokerage. Buyers hear a lot of confusing advice about mortgages. So today I'm here with mortgage broker Ron Zithart, and we are doing a quick rapid fire questions to clear things up. Let's go to, I have a question about appraisal.
Sure.
So what happens if the bank's appraisal comes in lower than the purchase price?
Oh, okay, that's a good one, and that is something that we've seen for the last, since the time the market kind of started coming down. The short answer to that is that the bank is going to give you the mortgage only up to the appraised value. Okay, if I was to, let's say, explain with the help of an example, let's say you bought a property for $800,000. But after the appraisal is done, we see that the value of the property is only $775,000. It was a very typical case actually. The bank is going to consider the transaction to be doable only at that $775,000 appraisal value. The difference, if you already, let's say, finalized the agreement, the difference is something that the clients have to then come up from their savings, or they have to renegotiate with the seller. But yes, once the appraisal value comes in lower, the banks are not going to go beyond the appraised value.
So will have to be a lot of negotiation with their agent.
No, in this case, typically what happens is like the experienced agents like you, right? You will be able to kind of predict what the rate will go to, and my experience has been that it's always like that. Realtors are able to predict what is the actual good price that somebody can go to, and also at the time of the offers going back and forth, right? They talk to me, right, and I tell them, okay, if the appraisal is going to be only this, then we buffer it and make sure that you don't get locked into a contract without having resources. So we tell them that the realtors and I we work like with you as well, right? So we make sure that the clients are not suddenly impacted by this because they don't really fully understand what's happening, right? But yes, this is a problem that we've seen in a lot of cases. Clients come to me after a lot of saying that we don't have we can't get the mortgage. It's not, unfortunately, there's nothing we can do because the banks are very strict about this. Their guidelines are very clear that they have to go with the appraised value.
So besides the down payment that a buyer needs, are there other closing costs that they should be prepared for?
Yes. So typically, and this is something that banks also actually ask for. This is money that the banks want you to have. You don't really need to give it to anybody. So in most cases, having closing costs for approximately 2% of the purchase price is more than enough. In the case of insured mortgages, actually we can even do 1 to 1.5%. So insured mortgages means less than 20% down payment. So I would normally tell clients that have the down payment and see if you can have another 2% extra. So $800,000 purchase price, another $15,000 to $16,000 extra, in your savings account or checking account or whatever. The money doesn't even need to be moved around. We just need to show the bank statement, which show that that money is there with the clients and it's available. So what is the point of this? The closing costs are typically for lawyers' fees, land transfer tax, anything which requires the transaction to complete. For that we consider that, and in Ontario typically it doesn't go beyond the 2% number. In very exceptional cases, if the purchase price is very, very high, that's different. But anything around $1 million, $1.5 million, it's the 2% is more than enough.
First-time buyers still get some funds back from the government from the land transfer. Is that program still on?
Yes, that's something that they talk to the lawyer about when they're doing the closing. But there is a first-time buyer rebate that happens in the case of Ontario. I believe it's up to $4,000. So that's a good savings that people can get, especially first-time buyers.